You ready to get started?
Yes.
Okay.
All right, here we go.
Let's do this.
Good morning. Good morning, PMR, and welcome to Success 2021. Most of you know me as Jack Pritchard, the Chief Credit Officer, but today I'm also the proud Master of Ceremonies for Success 2021. Be bold in a new world. Success is an exciting content-filled series of meetings and events, guest speakers that include 5 scheduled events over the next 7 weeks. Starting today with a packed schedule and ending with our final event on April 6th, Financial Wellness with Mr. Corey Swain and Mr. Kevin Wang as our guest speaker. Today's theme is Be Bold in a New World, how to respond to the ever-changing landscape, COVID-19, political change, market volatility, how to face the challenge of change, how to experience success in 2021. I know the next person needs no introduction, but he's going to get one anyways. He's more than a managing partner. He's our leader. He's our #1 problem solver. He established and maintains the culture at Premier Mortgage Resources. He has had continued growth and success regardless of the challenges placed before him. It's my pleasure to turn the floor over to our leader, Mr. Corey Swain.
Well, thank you, Jack. I appreciate that. So, guys, 2020, despite all of its challenges, created a lot of opportunities for our industry, right? And as PMR, we definitely benefited from those many advantages. So we took opportunities there, and it's an understatement to say that we're all very fortunate and blessed to have such a great year in 2020. So having said that, we support our communities in several ways this last year by fundraising together under the PMR Give Back banner. We raised over $40,000 for local food banks in Idaho, Washington, and Hawaii. We held several other fundraising drives, including pet supply drives, diaper drives, holiday gifts, and seniors in need, and raised over $20,000 for pancreatic cancer. All in all, we raised over $60,000 for our communities and different special needs people and folks. Our crew shined in 2020. I couldn't be proud of our company. Despite all the curveballs we had in 2020 that were thrown at us, we still managed to end up with a great year. So we, in 2020, as a group, closed 6,975 units, just over $2 billion in production. And that's a 56.9% growth year over year for 2020. This is on the heels of growth of 42% in 2018 and 23% growth in 2019. This year's year-over-year growth has allowed us to serve our communities and our team members. I'm proud to be a part of that team that gets the job done while also taking care of our communities and employees. All of you may have made substantial efforts to support a community this past year, and coming up with a list of top employees was extremely difficult. To that point, because of our growth and because of our effort by so many, we had a tough time naming all these folks, by the way. It was difficult to come with all the top employees this last year. So to that point, we want to come up with different people in different categories and name as many top producers and employees as we could. So let's kind of kick that off this year. So like I said, it was a tough list to put together, but here's the names for the year. There's a couple of people in each category. Processors of the year were Janet Flaherty and Kayla Kowitz. Employees of the year were Riley Illibridge and Stephanie Gentry. Closing and funding MVPs of the year, Tammy Hurt, Amanda Carlson, and Brandy Aldrin. Underwriters of the year were Marlene Rogers and Mark Hoffman. Team captains of the year were Modesty Martinez and Frank Schmidt. Our PMR Spirit Leaders of the year were Susie Brown and Christy Powell. Loan Officer Rookies of the Year were Christy Moore and Crystal Gilbert. And Operation MVPs of the Year were Elena Nick, Brianna Hughes, Donald Crawford, and Michelle Marivold. So those are all part of our special team members here. And there's one other award we'd like to give away today, and that's the Premier Award. This is a new award for us this year, and it's given to a leader who exemplified our culture by leading with integrity and driving synergy between their departments and ours. And what that really means, guys, is working really hard and having a ton of grit. This company is built on grit and hard work, and this person definitely exemplifies those traits. And that award goes to Miss Amy Packer. So congratulations, Amy. Thank you. That's our Premier Award of the year. So let's kind of get into some top producer awards this year, guys. There are several of you that did extremely well this last year. The list is long, and it's very impressive. It's going to take me a while to get through, but let's just get right into it before Steve and I get started with some of the other stuff we have planned for today. So we have several branch manager categories that have won this past year. Boise won, Mandy Feely. Kurt Lillibridge and Everett, San Jose, Dave Schumard, Twin Falls, Cliff Jarrow, Federal Way is actually shared by Brian McKechnie and Spencer Richardson, Roseville, Brian Giovacchini, Roseville also, Shar Rupel, and Walla Walla, Brent White, and David Nishimura in Portland is another branch manager, and Danny Salas in Chico, another branch manager that's won. So we've had some big branch managers this past year. Actually, I've got a few more here on my list. So let's see here. We've got Matthew Reiner in Spokane, Susan Gordon in Kona, David Barton in Coeur d'Alene, Sean Parker in Lee Summit, and then Fred Schiffer in Portland, and Lauren Harvey in Walla Walla, Karen Lindgren in Grand Rapids, and Curtis Megas in Meridian as well. So let's start. That's it for our branch managers. Let's start with our top producers. The top producing award goes to Team Mandy with 150 million and change, and that is Team Mandy, as you know, Mandy and Veronica and Brittany, Veronica Tomeo, Brittany Essink, and Kimberly Zweiger, all a part of Team Mandy. So another top loan officer award is for Cameron Lilliebridge, that team with 88 million, and that's in Everett, of course, Team Cameron and Team Lilliebridge. The next producer there in Everett is Kyle Lilliebridge, 65 million, almost 66 million. Michael Boyle, LO assistants on that team, a licensed LO assistant, Michael Boyle for in Kyle's group. And then Team Jaro, Meredy and Erica Alonso for 57 million. And then the next loan officer in that list is Lisa Cardoza for 53 million, and then Mark Feller for 52 million, and Paul Marsh for 52 million, and Doug Schroels 52 million. A lot of guys right in that $52 million range. And then Jonathan Matic for 44 million. Lake Oswego, David Baker, 43 million. Meridian Lane Lowry for 39 million and change. Another LO, Crystal Smith, her first year, 37 million. And Shannon Book, 37 million as well, and Spokane, officer assistant. So let's see, here else we have. We got Kay McKechnie, 31 million, almost 32 million in Federal Way. And Sabrina for 31 million in Spokane Valley, Sabrina Nelke. Vanessa Wereton, and LO assistant in Spokane for 31 million on that team. Kathy Kimperzak, 29 million in Cornville. Jerry Schumart, 28 million in San Jose. J.C. Poole, 28 million in Twin Falls. And Austin Cooper, 27 million in Roseville. Leslie Woods, looks like 27 million in Kona. Kaylee Merschel, 23 million in change in Roseville. Sandy Gregston, LO assistant, licensed LO assistant, 22, almost 23 million in Meridian. And John Telesco in San Jose, almost 23 million in San Jose, John. So Mark Verdugo, 21 million in Roseville. Christy Moore, 19 million in Bend. Crystal Gilbert, 18.5 million in Meridian. Eric Willis, 17.4 million in Meridian, and Toby Pertasuli, 17.2 million in Fresno. And I think that wraps up. That's quite a list. Really impressive. So great job, guys. That's a heck of a year for everybody. It's a long list. I'm sorry it took me a few minutes to get through that, but I want to make sure I recognize everybody. So we're excited to have our guest speaker with us today. Jack, will you tell us more about what's next?
Yeah, let's talk about success. The success breeds success. I'm in the right place. Our next segment should continue that trend. We're incredibly lucky for today's fireside chat. Today's agenda is to touch on industry change, the mortgage industry post-COVID-19, impacts of regime change, and more. Our hot streak got even hotter when we were able to confirm that Mr. Steve Richmond accepted our invitation to speak and help us kick off Success 2021. Steve Richmond is a national speaker who has energized, taught, and motivated more than 300,000 professionals in every state in the U.S. After years of success as a litigation attorney, Steve entered the mortgage and real estate profession and has become an expert in the high LTV borrower market. He's been a loan officer, account executive, and manager of a mortgage operation. Steve has spoken at several Mortgage Banker and Broker Association events, has presented before loan officers representing over 500 different lending institutions. Steve is currently employed by Genworth Mortgage Insurance as their national spokesperson and customer sales trainer. Thank you again, Mr. Richmond, for your participation in today's events. We're certainly glad you accepted our invitation. And Mr. Swain, we're all looking forward to today's fireside chat.
Great. Thanks, Jack. I appreciate it. So, Steve, welcome to our event. We're glad to have you here. So a couple of questions. How do you think COVID has really impacted our industry this past year?
Well, I mean, that would really be the quick answer to everything. COVID's affected everything. First, I want to say thank you all so much for having me. Jack, I wish I had your voice. I got this like nasally thing. You sound like you're like a great MC there. So thank you very much for that, Jack. My first thought when you go, how did COVID affect it? I know I said a lot, but it really didn't. In the fact that, in my opinion, and all I'm giving you today are my opinions, is COVID got us to where we were going anyway. So it really just accelerated what was going to happen. We know that there were a ton of changes in technology, and now there's a lot of people who are now working from home offices today, especially real estate agents. We know, I mean, look around at this. We got Kurt and Candace and Crystal and Shannon and another Shannon, and everybody's on video calls right now. We were getting there anyway. This just accelerated that. I've been in the business since 1996. Since 1996, I've been hearing about electronic signatures and how you're not going to have to go to the closing table and you can do it electronically. And that's happened because of COVID. So my first comment about how has COVID affected everything is it just got us to where we were going that much more quickly. The second one is you got to look at how it's really hit the economy. And obviously, it hasn't hit every state the same. It hasn't hit every sector the same. It hasn't hit every profession the same. So when you look at the recovery and whatnot, that's another way to look at it. I mean, if you want to go into the whole K type of recovery versus the U or the V, I'm happy to go over in that direction. But that's the other big way that I see it hitting.
Oh, we lost Steve's audio.
Lost my audio.
There you go. You're back.
I'm back.
Okay.
Did you get any of that?
We got most of it. Yeah, I think you're fine.
Okay. Not sure what happened.
Well, hey, it's it's technology. It comes and it goes, right? So I think I'm with you. I think really in a lot of ways we're right where we're going to be anyway. I think COVID just pushed us there faster. I'm a big believer in the fact that we were going to have decentralization anyway inside of our industry, and we're going to see big cities start to flatten out. People move to smaller cities and communities. We've seen that accelerated with COVID. How do you think the mortgage business really comes out of this whole thing in the end? What do you think happens?
Well, I want to answer that in 1 second, but I want to back up just 1 second to that question. You were talking about big cities. The National Association of Realtors, what they do every year is they publish a profile of home buyers and home sellers. And I've been reporting on that for about the last 12 to 14 years. So I've seen where the trends are. But this year, it's really neat because what they do is they go from July 1st of one year to June 31st of the next year. And that's where they pull their numbers for those 12 months. But this year, when you looked at from the July 1 to the June 30 or 31st, I don't know how many days June has, to be honest. But what they did was not only did they do 12 months, they also did a 3-month segment. And the 3-month segment they did was April, May, and June, because that's when we had COVID come to town. So they said, now I can show you what happened for the year, and I can show you the impact COVID did. And interestingly enough, what you're watching is when people bought homes in those 3 months, not much less. There was a decline in home purchases in cities because nobody wants to be around a whole bunch of other people and they say, oh my gosh, I'm going to have COVID. There was an increase in the suburbs, but there was also a decrease in wide open territory, in where the vast lands are and things of that nature. So in farming communities, things like that, because people still want to be around decent health care. So what we see in the time of COVID is the suburbs where there's decent health care, but there's not overcrowding, has jumped up significantly. Post-COVID, I think what we're going to see, if you look at anybody, and I recommend a couple sources here to everybody who's on this call. If you're not signed up for Rob Chrisman's newsletter, you need to sign up for Rob Chrisman's newsletter. ROBCHRISMAN. Rob Chrisman is the #1 read newsletter in the mortgage industry. It is absolutely free. I get it. It's Monday through Saturday. He takes Sunday off. We'll give him 1 day off. I read it every single day. Not only is it going to tell you what's happening within the industry, it tells you what your competition is doing, and I think that's really important. There's also a guy named Elliot Eisenberg. He's at Econ, ECON 70, Econ, ECON 70. And I'll put some of this stuff together on an email and ship it out to y'all so you can distribute it. That's fine with me. And what he does is he says, this is what happened to the economy over the last 24 hours. So he every day, Monday through Friday, says, this is what happened to the economy. And the reason it's called Econ 70 is it will tell you in 70 words or less what happened to the economy. So Chrisman can get a little verbose. He likes to talk a lot. But Elliot, he cuts it down and he says, hey, in 70 words. Okay, it just popped up. I saw what happened. I want to make sure I didn't lose my audio again. Both of them have gone on record. And can I guarantee you what's going to happen next year? No. So, by the way, if you disagree with, these are just my opinions. You can't have future-looking opinions. If you disagree with my views and opinions, please don't get upset with Genworth Mortgage Insurance. Please get upset with me. Contact my attorney. I happen to be an attorney, so just give me a call. So, when you read both Chrisman and Elliott, in January, they both said, especially in the mortgage industry, it's going to be a very similar looking world than it was in 2020. You just told me, look at all these we had a great year. Look at these people who got great awards. We did really well in 2020. There was good volume. All of that is expected to continue into 2021. The expectation is, yeah, there's probably going to be a little bit of a rate increase some point throughout the year. I think they even went up today if you look at what the rates did specifically today. But you're not looking at a dramatic increase over 2021, according to the National Association of Realtors. First-time home buyers will not be affected in an increase in rates until you hit 6%. We're still floating around 3%, 2.75 to 3%. So you're not getting anywhere near that. First-time home buyers make up about 31% of the marketplace. So you're not going to get a dramatic change or effect based upon rate. It will affect the refi market a little bit. While that probably is going to come down in 2021, you're going to watch the purchases get a little bit stronger in 2021. And so that will supplant the decline that happened there. So you're still going to have somewhere between, the estimates that I've been reading is somewhere between $2.7 and $3 trillion worth of originations. If anybody believes that $2.7 to a $3 trillion industry is a dying industry, I would challenge you on that. I'm happy to be in an industry that's 2.7 to 3. And I'm not sure if you heard me say before, if you look at how the economy is coming out, is it a U recovery, a V recovery, or a K recovery? What we're looking at, and if you don't know what that means, so we know that the COVID hit, okay? COVID hit and everybody said, what happened? The economy went down. Oh, is it a V? Is it going to shoot right back up quickly? Is it a U? It goes down, it stays down for a while, and then it comes back up. Well, the way that it's looking right now is it's going to be what's called a K recovery, which means it goes down and it goes up for half the sector and it stays down for another half the sector. When you look at people in the hospitality business, bartenders, waiters, waitresses, hotels, airlines, casinos, stuff like that, it went down and it's staying down there right now. When you look at other industries, nurses, pharmaceutical, healthcare, banks, mortgages, real estate, it has been going up actually. It came down and hit with COVID and we've had a much faster recovery. In that it shows, yeah, those who are still making are buying homes and are happy to do it. But since the mortgage business and the real estate business are in that upper end of the K, we're watching those industries continue. I say amen, hallelujah. I'm thrilled to be a part of that business. While others are suffering, and I'm not taking anything away from them, when we look at what's going on with mortgages and real estate, it still is remaining very strong post-COVID.
So how do you see the new administration? And I appreciate those comments. I think COVID has leveled the playing field in so many ways in the economy, not just our industry, but other industries as well. But and I think we'll see how that plays out the rest of this year with consumer demand and purchase business, et cetera. I guess I'm concerned about inventory number one in all of our markets. I don't see that really getting fixed because of COVID. I think that slowed things down. I continue to hear a lot of agencies and cities, et cetera, are much, much slower and tougher to get things approved. Therefore, housing has really slowed down. The ability to get permits is much more difficult than it was a year ago. And so I think even though with all the demand we have, I am concerned with the ability to provide housing in any shorter. Right now, we're about 7 million units short in the United States. So, Steve, what are your thoughts about that?
Can I give you, I don't disagree with anything you said, but I want to look at that silver lining on that cloud of inventory. A lot of people think, are we going back through 2008, 2009? And most predictions, and I don't believe we're going to hit that 2008, 2009, 2010 bubble again. Why? Because we have two things that are very different than before. There we had too much inventory. Here, when you have a lack of inventory and you have a lot of equity, right now we're looking at one of the highest times where people have equity in their homes. So with low inventory and high equity, what we're finding is those people that are suffering at that bottom of that K, they're able to sell their house and get out of it, and there's not facing that same dramatic of a problem. Back in 2008, 2009, 2010, people were underwater on their mortgage. There was a glut of homes, so they couldn't get out of it, so they just walked away from the home, and that really helped push the economy down and hurt the economy overall. Versus this time, it looks like housing and mortgages can help lead the economy out of the problems that we're having. So I know I'm looking for that bright spot with the lack of inventory. I think the lack of inventory is going to help stabilize the market instead of hitting that bubble status that we had back in 2009-ish.
I agree with that. What kind of advice would you give operations and sales so they could kind of continue to cope with the changes that we've seen with COVID and inventory issues, et cetera? What kind of advice would you give?
First piece of advice is simply this, and I don't care really who you are within the organization or even from a real estate company or whatever, everybody has the same goal. So the first thing is we are all rowing in the same direction. I might not necessarily agree with some of the things that are being done, but at the end of the day, we still all want to close loans because we're all helping do the same thing and work together. And when you're trying to do that, I always say keep your communication wide open. The better you can communicate and honest you can communicate with one another, that's a very good thing. When you're looking at people do what? They want to do business with people that they know, they like, and they trust. We all want fast service. We all want quality service. We all want a lack of mistakes. Even if you're on the ops end of anything, if you're a processor, an underwriter, whatever, you still affect speed, quality, and lack of mistakes. So we're all a part of sales. The other thing that I would say, and there's something, if you've ever seen a place, Google came out, and I know you're all close to Google land over there, but Google, it's Rework with Google. It's one of the greatest websites that nobody knows about. So what Google did is they said, anytime we publish a white paper, we're going to share it. And Google came out at Rework with Google, and they said there are 5 ways that you can really have good team accomplishment. You need to have these 5 things, and I'll do it in reverse order like they did. Number 1, to really believe in what's going to happen in your team, do you see that the impact that you have on others? And I would put, and you said in processing and underwriting and operations, but I would say everybody in the mortgage industry has a huge impact on our customers because we're helping them get into homes. So when you see we have the same goal and it impacts all those other people and it's for a bigger why than we have, we're helping everyone around us, we have that. You find meaning within your job. And I hope the folks in your ops find meaning within their job. If you're not finding a lot of meaning right now, I just say, look at the impact you're having and you'll find meaning. The other 2 things is you need structure and we have dependability. So we need structure and clarity. Who's responsible for what and how can we depend on others? Well, guess what? That's what the LO needs. They need to be able to depend on all the others so that the common goal of closing the loan gets through. So it's that one team, the good communication. We know who to be dependent upon because nothing gets done without the operations. And lastly, we come up with what's called psychological safety. And that means that you're treating everybody else with respect. And you know that if there's one little mistake or one little problem, it's not the end of the world. If it's not clicky, people aren't talking about you behind your back. And the bubble's not going to burst. And I hope that we've already set up why we should have psychological safety in today's market. I think we started talking about that already. And if I'm getting like too weedy and too like, oh, out there floating in the ether, just let me know. I mean, I'm happy to talk about whatever and whatever level that you want. Shannon's smiling at me right now. So Shannon book, I appreciate it. I know I'm hitting with pieces. So that's how I look at the team concept of it.
So I think one more question. So how would you look at the current administration? Obviously, it's changed, and how would you think that's going to affect us this coming year?
I like to break that down into a twofold kind of a concept. The first part is, I don't care who the administration is. I'm not on a political soapbox. I'm not saying I like Trump. I'm not saying I like Biden. I'm not saying it's going to be better one versus the other. But I ask every person on this call, see the market, what the market doesn't like, stock market, mortgage market, any market, they don't like unpredictability. They want to know what's going to happen. The beauty of this election is you had Trump, who just had 4 years, so we know what he's going to do, and Biden, who had 8 years before that as vice president, so we knew what he was going to do. Is my volume still coming through okay? Or people are just...
Yep, you're good.
Okay, I got blank faces all of a sudden. So if you look back at unemployment, once Biden was vice president, it started to go down. And under Trump, it continued to go down. Both of them are very interested in having high employment. If you look at rates under Biden since 2010, mortgage rates have been below 5%. So they were low under Biden and they were low under Trump. If you look at home price appreciation since February of 2009, when Biden was in the White House as vice president, it started to go up. And under Trump, it continued to go up. If you look at the stock market, it started to go up under 2010. Under Biden, it continued to go up under Trump. So either administration, I don't care which one you like, they have all had the trends going in a much more positive way. They believe in home ownership. They believe in a strong economy. They believe in making sure that people have jobs. Now, how they do it can be two different ways, but they both have the correct intent. Now, the second thing, so that's number one. You look at the past trend. What's going to happen in the future? First off, we don't know. All I can tell you is some of the things Biden said. I can't promise any of it. When I was in junior high school, I remember a kid who was running for student government, and he promised we were going to have sodas with our lunch, and he won the election, and we never got sodas with our lunch. So I could tell you some of the things that he said are going to happen. I can't promise what's going to happen. But what I've seen is for everything that somebody goes, oh, my God, that's bad, you see something else that's good. Oh, my God, it's bad. He's going to raise taxes on corporations, and he's going to raise taxes on higher income people. That's going to hurt the market, maybe. But he's also said we're going to have more stimulus, and we're going to get money out to more people, especially lower income, which does what? That helps the first-time home buyer, and that helps stimulate Wall Street and the companies to continue to have higher resources and more consumer goods being bought. You say, oh, well, that's what's happening, and possibly rates are going to go up, and they're looking at more restrictions under the CFPB and having a little bit tighter hold of what's happening there. That's what has said is going to happen. Under that, though, I also say he has said he's looking for a $15,000 first-time home buyer credit for any first-time home buyer, so there's a bit of stimulus. So I look at it as a very much up and down. Every time somebody says that's bad, here's another policy that looks good, and therefore it's sort of it's going to even out. We're looking at somebody, we're saying, oh my gosh, what's happening in the time of COVID? Under Trump, Trump said we are going to stop foreclosures and evictions, and we're doing a lot of forbearances. Under the Biden administration, the pause button on the foreclosures and the evictions has now been extended to March 31st. So Trump did it, and Biden is extending it. So they're doing the same thing. Under Trump, they did forbearances. Biden has extended the forbearances out until March 31st. So we're watching that to continue to be the same thing. I'm watching under the Biden administration, what he seems to be going after more than anything else is racial inequality and discrimination. And I think everybody would say, hey, we're not in favor of racial inequality and discrimination. I would imagine that. So where it looks like it's going to get tighter right there, if that's not something that you are immediately participating in, I'm not sure how much of an impact that's going to have. When you look at Chopra, excuse me, when you look at Chopra, who has been the nominee for the CFPB, he says, yeah, we're going to be a little bit more restrictive, but if you look at his history, he's looking at student loans first, and he has a greater concern in student loans. So it's going to take him a little bit longer probably to get over here into the mortgage world. He's going to hit student loans first. But let's look at these student loans. If you look at it, Maxine Waters came out and said, hey, let's give a $50,000 wipe off of student loans from people. And Biden said, no, 50,000 is too much. How about 10? And the Republicans have basically said, no, if you signed up for it, you should be able to pay it back. So there's three arguments right here. Should it be a zero payback on student loans, a $10,000? We'll give them a discount, 10,000 or 50,000. According to the National Association of Realtors profile, the average person with student loans has 30,000, which I think is astonishing how that's right in between the 10,000 and the 50,000 that the two of them are arguing right there, right? So when you say, where do you think we're going to end up? I look at the real numbers, 30, and one's at 10, and one's 50. I don't think any of those were fictitious or made up numbers. They sort of knew where they were. So when you think about, hey, how do I look at that administration? There's going to be changes, no doubt about it, but I see it they're trying to do it for the positive. What they try and take, you may or may not like, but I'm watching it sort of like a counterbalance from every argument. Every time I see, they say, I didn't like that, but I did like that. So I think we're going to end up very much what we're used to.
Yeah, I can't agree with that. I don't think you'll see a lot of changes, regulatory changes, maybe at a state level, but probably not at a federal level. So, guys, I think that's what I've got. Steve, anything you want to ask me, or any questions that before we kind of move on to Jack?
Well, overall, especially for the new people, I mean, I'm looking in Shannon's room. She's got a bunch of new people, and she told me at the beginning, you got to pump these people up. Why'd they make the right choice coming to this company and working here?
Our culture is really, really strong. We really love what we do. We're very passionate about it. We work very hard at it. We're definitely a block and tackle company. We like to get things done. Sometimes all the shiny stuff is really hard for us to figure out. We'll try every day. I'm probably the least shiny of the whole group. I think Jack's definitely the best spoken of the whole group. So I try to do the best I can. But from a company standpoint, our culture is extremely strong. Like I said, we work hard. We really care about everybody. We have an open door policy. We don't ever want anyone up here to feel like they're not being heard. So for me as the leader, it's important to make sure everybody knows that they can be heard. They do have a voice. We do care. We have a company to run. We understand that. We think our employees understand that as well, but we definitely care. We definitely want to hear. So, and we have a vision for growth. And I think if you're a new person here, that's important. There's places for you to grow. There's places for you to expand your career and your goals. And we want to make sure that happens for you. So I think from a company standpoint, we are a great place to be, and we're really excited about the future.
I think that's great because at Genworth, that's why we like partnering with you. I mean, your first word that you said is we're passionate. If there's one thing I come across, I don't know if I came across as knowledgeable or even helpful today, but I think you got to tell that I'm pretty passionate about what I do too, man. I get all jacked up on this mortgage stuff. I just think it's great. And so that's why I appreciate that we get to partner with you all, because it is that community that you have over there and is the passion over there. So I thank you for allowing Misty and I to be on this call just for a couple minutes today. And I don't know if she wanted to say hello, but on behalf of her, I'm Steve. That's Misty. We're with Genworth Mortgage Insurance. Thank you so much for having us. I appreciate it.
Thanks, Steve. Thanks, Misty. Really appreciate your time today. And just, hey, one thing I want to kind of go back to that I blew past all the names on this list, by the way. It's difficult doing the top producers list, just so you all know, when it's not live. I'm used to doing this in front of the audience. It's much more fun when we're all together. It's a little quirky for me to do it over a Teams meeting. There are 53 people that won this year, guys. 53 is a company record by far for us. So we'll be taking over 100 people on our top producers trip this year. That is a phenomenal record for this little company. So if you look at what we've accomplished this past year, it's the numbers of growth, the percentages are all great, but just think about where we've come in 1 year. A year ago at Success, I said we're going to do $1 billion in 2020, and I kind of pit my stomach when I said that, because wasn't really sure how we're going to pull that off. And we blew past $1 billion and did $2 billion, and we're on our way to do more than that this coming year. And that kind of growth provides opportunity for all of you, for the company. It actually makes us a better company. It just makes us more well-rounded. We get better tools, better processes, better people, and we're just trying to grow and do the best we can every single day. So Big shout out to all the top employees, all the top producers. It's the biggest list we've ever had, and I'm super proud of each of you. So thank you so much, Jack. Let's roll on. Here we go. What else we got?
Thank you, Mr. Swain. Thank you, Mr. Richmond. As you can imagine, these topics are all top of mind to people like me, people like us, mortgage people. I know I can speak for all of my PMR colleagues in my state. Thank you for your contribution to today's events, Mr. Richmond. It was very much appreciated. Department heads, now we go for another fun part of Success 2021. We get to hear from all of our department heads, the PMR leadership team. This is a little different from what is normally done in our weekly sales meetings. Today's focus is how each department head, each member of leadership will support production. What can we do for you? The department heads will give a quick 2 or 3 minute overview on how each department plans to support production this year. I have a little dual duty here. I'm the Chief Credit Officer, so I'll go first. We'll start with me. Scenarios plans to continue to improve response times and accuracy. Plans to continue to assist production with structuring, clearing conditions, and closing loans. Continue with availability, including evenings and weekends. Second level review, continued efforts to structure and save loans with documentation or risk tolerance issues. Specialty products, continued expansion of the PMR product line. We are adding units with every successful addition. The scenario desk touches and supports many departments, condos, broker outlets, jumbo lock desk, escrow holdbacks, renovation, and more. The goal and how we plan to support production this year is to offer more, offer it faster, and with increased accuracy. Mr. Hagan, I believe you're up next, which is always the important stuff, finance. Jim, you out there, Mr. Hagan?
Thanks, Jack, by the way.
Yes, sir.
Great stuff. Guys, I want to give Jack a round of applause on our scenario desk. I got to tell you, it's been an incredible lift for us this year. And Amy knows what a savior it's been for us, because she and I ran through all the scenarios pretty much last summer. So yeah, we're super happy to have him on that desk helping us out, and he's doing a fantastic job of it. So thank you, Jack.
Hey, well, thank you very much. Jack. Well, thank you, Amy. And we'll come back to Mr. Hagan. I've got him lost out somewhere in the internet world, and we'll go up to HR, Miss Marty Danner.
Hi, good morning. HR is really going to try to change the way that people think about HR and the way that we want to support production this year. Our biggest thing is we want to make sure that CompensSafe is implemented and working by June 1st at the latest. We've made some great strides, and we're confident that we will meet that goal, and hopefully it will be sooner. Also want to streamline some recruiting and onboarding processes with systems to make it easier and to make more visibility for the new hires and the branch managers to be able to see the new hires. Hopefully we'll be able to expand our benefit options, lower some premiums, and be able to think outside the box to be able to offer some different sort of benefits to everyone. And we're going to do our best to work with marketing on some recruitment strategies to be able to bring in some new hires and to build our team as PMR continues to grow and grow. Reach out to me, and particularly if you're having issues with response times from HR or payroll, and let us know what your issues are, and we will take care of you. You guys are our clients, and we want to make sure you have what you need and make this part of your job seamless and easy.
Great. Thanks, Marty.
Thank you, Marty. All right, Mr. David Dysart, Mr. Secondary himself. Mr. David Dysart's next.
Well, good morning, PMR family. Happy Tuesday. Sorry I don't have better news with rates as you've seen today, and before the holiday, the great rotation trade seems to be in full swing. So hopefully we'll get a reprieve, but yeah, rates are lower. The bonds are just getting hit really hard, and all the emphasis now is in the stock market. The risk-on trade is on full swing, so hold on to your seatbelts. It's going to be a bumpy ride. Hopefully not too much, though. The positives are that with the Fed in such control of the market, we're not likely to see quite the convexity trade that would send us in a really severe move. This has been a pretty orderly move up. It's never fun to go up in rate, but relatively compared to other cycles we've seen in the past, this is a fairly orderly one, and we should expect that with the Fed in such control. They were light on Friday, they're light today, hopefully coming in tomorrow with some more support for the market. Hopefully we can stabilize here and maybe even work on improving a little bit, but be defensive. That's where we're at right now. So how are we going to support sales with the lock desk and secondary? We are actively thinking about that every day. One thing we've started that we're really happy with is our weekly Wednesday, let me get my list here, sorry. Weekly Wednesday training sessions. Jessica's been doing a great job with that. Rotating topics with Q&A sessions at the end. And then, of course, we're always available and have done new LO orientation training sessions. And, of course, just reach out to us if you want us to do a special refresh of any topic. We can certainly do that at your request. We also have updated PMR Connect, and we're doing a really good job, I think, of keeping that up to date and making sure that you have good, valuable information that's timely and accurate. If you don't see that, let us know immediately. We'll correct that. But we're happy with Connect getting more up to date and on top of that information. And then, of course, we're going to be adding additional products as they're available. We'll be rolling out a long-term lock program, supporting that business, as well as construction. Corey has been working on that. We've been working hard on that to roll that out. We're also going to be rolling out QM test, points and fees test functionality in OB. So that'll help you out right off the bat so you don't lock in a scenario that's not QM passable. So hopefully that'll be soon. That does take quite a bit of programming, but we're very excited to roll that out for everybody. And then, of course, I hope you enjoy and get some benefit out of our daily email rates emails every morning. We continually try to improve those, and we're going to be rolling out a little more market data in those, with some charts and trending lines to give you a better perspective on where rates are vis-a-vis current trends and past trends. So look for that coming soon. So that's all I got for now. Have a great success. Thanks, guys.
Thanks, David.
Thank you, Mr. Dicer. Now we're up to one of my favorite departments, compliance. I know people like to make faces, but Tracy Reese is awesome. Miss Tracy Reese in compliance.
You know, guys, I'm not sure Tracy's on today, so if is she there? And I'll tell you why. Have you seen the news? I mean, San Antonio, Dallas, Fort Worth, they're all under snow. They have limited power. And she texted me this morning. She was going to try to be on, but they literally have had power for 5 minutes at a time and then off for an hour. And so they have no heat. They have very limited, actually the gas pressure's down. They have a hard time keeping their gas fireplace going to stay warm. So we hope that Jack and Norton, our servicing manager, are both okay down there. It's kind of rough. And then Mandy and I have family down there as well, so worried about them. So anyway, we all need to have a prayer for our folks in the South. It's pretty rough down there today. You want to go back to...
Well, for Tracy's safety, and I see Mr. Hagan's back. Mr. Hagan, we'll circle back to you if you're ready to go.
I sure am. I'm a little bit tech challenged sometimes, so I apologize. Anyway, so I think Amber Hansen was introduced to the sales team in January as our new controller. Not only does she bring us her talent and expertise, but also create some bandwidth in the department. So Stephanie Gentry, who you heard earlier, won an Employee of the Year, will be dedicated specifically to branch finance accounting. So we're going to try to improve the timing of the delivery of the financial statements, as well as provide some additional reports that will help the branch managers get some more transparency into their business. We're going to try to do some peer comparisons of some metrics so that you can kind of see not only how you're doing individually, but how you're comparing with your peers within PMR. And then lastly, I hope to have, if not monthly, but very regular conversations, phone conversation, team meeting conversations with each of the branch managers, just to kind of review where you are financially and look at opportunities to improve some profitability.
Thank you for taking very much. Glad we got you back in. Glad you got connected back. I guess we're moving on to Miss Pat Cox, our operations officer. Pat, there you are.
Good morning, everyone. So operations is so important for production and to be successful. And our awesome PMR operations team is here to support all of you. In 2021, operations will be ensuring we are successful in the integration of new branches as they come on, from the beginning of the transaction through docs and funding. Knowledge is a key to a successful organization. So in 2021, the management team will be setting up a PMR University, and we'll be holding valuable training to cover things like income calculations, guidelines, reviewing appraisals, and how to utilize the collateral underwriting review, and reviewing title commitments to help ensure a smooth closing. We'll continue to review productivity within each area to identify staffing needs. In 2021, everybody was suffering. It was so difficult and to hire new people in 2020 and 2020. So in 2021, our focus is on recruiting and staffing. And as we do that, we will be hiring for positions and looking for candidates who fit our culture. That's so important for us to succeed, because we've got a great culture here. Another big initiative for 2021 will be for our management team to review our current manufacturing process. We'll be looking for ways to increase our efficiencies and to continue to facilitate our quick turn times, and also look at ways that we can better utilize BITE to help us improve those efficiencies. And as processes and procedures are updated, Sal and I will be looking for ways to upload that information in a spot within Connect for easy access, so that everyone can refer to our policies and procedures quickly and often. And then finally, I'll be reaching out to all the branch managers this year as well to discuss your monthly projections and your goals, to help facilitate help you to facilitate pipeline management. I want to hear about your issues and concerns. I want to hear about your ideas for operations. Again, as Steve indicated, this is very important in 2021 that we keep open that line of communication and collaboration. That will be a definite key to our success. Thank you.
Pat.
Thank you, Pat, very much. Now we're on to the Premier Employee of the Year, underwriting, Miss Amy Packer.
Geez, thanks, Jack. Well, first of all, I'm kind of in shock this morning, so I just want to say thank you, Corey, and thank you to the leadership team. When I took this position, I had some big shoes to fill, and I continue to have those shoes to fill every day, but I could not do it without the awesome leadership team and the support staff that we have. So thank you all very much. 2021 underwriting, our goal is always going to be, sorry, Mandy. Not sure why my camera's not working.
There you go. Now we can
Is
see
it
you.
on now?
Yep.
Okay.
Perfect.
Thank you. Okay, so 2021 underwriting, we are going to drive to communicate better with our team members. I think there's always this communication that is between underwriting and the loan teams, that the loan team is afraid to communicate with the underwriter, to ask them questions, to reach out to them. We are all one team, and that's one thing that PMR drives on, is our communication with our underwriting, how they can reach them at any time that they need to. And we are going to work on getting better with that, with our communication this year, picking up the phone more, reaching out to you guys, suggesting ways to make a deal work. If they see something in the file like, hey, you know what, let's do this on the file instead of automatically sending out a suspense notice, if they know there's a way to make that deal work. We're going to continue to follow our AUS findings and no feel-good conditions. We are going to work on that really hard. Once in a while, you're not going to be able to see everything or understand everything that underwriter is seeing. So you still might have a feel-good condition that, well, you feel like it's a feel-good condition, but there's something there. That's where communication comes in, and just reach out to the underwriting team. I'm going to also monitor loans from our new branches to make sure that there's no issue with underwriting, that the teams are onboarding with no issues with underwriting. It's going smoothly. And also, of course, our biggest goal is we're going to continue to keep our turn times fast so we can meet the 24, 48-hour turn times. And with that being said, we're going to bring on some more underwriting staff and make sure that we don't go back to what 2020 looked like last summer. And I believe that's all I have. So thank you all very much.
Thanks, Amy.
Thank you, Amy Packer. Now we're off to Crystal Barliski in Summertime Shriner Ops.
Good morning. Can everybody see me?
Yes, Crystal B.
Awesome.
Oh, just mute yourself. It does
Am I
that
back?
sometimes. It does that. You're good now.
Okay, sorry. Fast Track is, of course, always here to support our production team. And one way we are going to improve this year is before we send a file back to you and just tell you in an email what was missing, we're going to pick up that phone or call you in Teams and say, hey, are you aware that your pay stub is missing? Are you aware that you, loan officer, did not sign this package and therefore I can't get to your disclosures? And give you a little bit of time. Point out maybe what we can fix to help get your file pushed forward. We don't want to be the reason your loan didn't get into underwriting today. We also want to keep the files that we push into underwriting clean. We're also rolling out training that is not necessarily Fast Track related, but will help our Fast Track team members grow into more better mortgage people. So how to read AUS, how to calculate that W-2 income. I'm going to roll that out here shortly, and anyone, branch Fast Track, Central Fast Track, everyone is welcome to join. As for processing, we're going to do a better job of keeping processors updated on all those guideline changes that come out, any overlays that we may have, and also just continuing training, kind of touching on what Pat already did. A well-trained processing department is much better prepared to help support our loan officers. And that's all I got.
Great job, Chris. I'm going to jump in there real quick and just kind of backfill that a little bit. I think they've done a great job at Fast Track this year, and the leadership team is committed to the Fast Track desk for a couple of reasons. One, it's really one main reason is that it's our training ground, guys. It's how we get started in this business. So last week we recommitted to hire several people to that position. We're looking right now, aren't we, Crystal, for new folks? And so keep that in mind no matter where you're located. We're interviewing right now for several positions, including Fast Track, underwriting, a construction manager. There's some positions we're looking for. Please get with HR on that. Marty will be happy to help you there. And I'll shut up now and leave it. Turn it back to Jack. Thank you.
Well, it's summertime. Would love to hear from Summertime.
Good morning, guys. How is everybody today? I see some are in snow like ourselves and rain, and some people are getting really warm weather, and that's not the case for Idaho. Just wanted to let everybody know that the IRLA is coming out, and it's going to be mandatory as of March 1st. So we are rolling out IRLA this afternoon. It will be in a manual form, but then starting tomorrow on February 17th, we'll be holding 2 daily trainings, one for production and one for operations. So those calendar events will be coming out soon. We're also working on rolling out LO and LOA production, like the university that Pat mentioned and Crystal mentioned previously. And this is to train production team members, new ones, and we're really excited about rolling this out. So we're still putting this together. We're putting one together for processing, and these are for brand new or continuous loan officers and for new processors and for current processors. So please stay tuned and we'll get you some more info as it's available. We also want to do continuous training and coaching I'm sorry, I just was repeating myself. It's already been a morning. I need coffee. And having brand new team members beginning in this industry with production start out in our operations fast track team from 1 to 2 weeks. So we really think that this is important to better understand our culture, flow, and processes. So we do that. We're going to start doing that for our corporate. And if you would like to take advantage of that for you guys in your branches, when you do have a new LO or LOA or fast track team member, and you would like them to please join our trainings, we will absolutely start them out in that position. I really do think that it's beneficial and it's been working so far. That's all I got.
Great.
Thank you so much, Tom. We're off to Miss Kirsten Drury. Kirsten?
Oh, looks like I'm on mute again. Yeah. Can you hear me now?
There we
Yes,
go.
Yeah.
perfect.
Great. I was on mute and I have a bad habit of this, unfortunately. So for closing, we have a few things that we are going to be doing. First, we are going to be adding staff because we want to be prepared. Summer months are going to be coming fast, and we want to make sure that we're ahead of the volume and can keep our current turn times. Production details and specialty product training is also going to be a good focus for us. This is going to help your closers know exactly what they're working on, and then when we go to do our balancing back and forth, we already know what to do and what to look for and the small little specifics that each product entail. Updating and revamping our closing checklist is going to help our closers in our workflow and help lessen errors. The last thing that we want to do is have a borrower come back and sign something because of an error. So we're going to tighten up our checklist and all of our flows to make sure that we are very streamlined. Lastly, we're going to be looking at more ways to prep your file ahead of time. Being proactive during the initial CD process has proven to get errors and issues resolved before we get to closing so that we are continuing to keep the file moving. We really hate it getting stuck because of an issue at closing or right before signing, and being proactive and looking at your file sooner is definitely going to help this. So we'll have a lot of things to work on, but we're anxious to get headed that way.
Great.
That's
Awesome.
Thank you, Kirsten.
Thanks.
Mr. Sal Cerrito, Tech Update. Sal.
Well, good morning, everyone, and welcome to Success 2021. So technology has been asked to provide ways in which we can help support production in 2021. The one thing we have not found is a way to make technology more exciting and enjoyable for your daily life. However, we are focused on keeping it simple and less of a headache. We know that, when you're having a problem with tech, you need it fixed right now. And we certainly understand that. We've been working at ways of efficiencies, and one of the things that we're going to commit to in 2021 is to support ticket resolution within 60 minutes during business days, within reason for most issues. If it's outside of support hours, it's next business day or within 4 hours. If it's urgent, call my cell phone. Get a hold of us. You can get a hold of us easily, and we can get this resolved for you. I know we've got some outlying branches, Hawaii, and we don't want to minimize importance of those folks out there, Susan, and also on the East Coast for Karen, or almost the East Coast, Midwest. So, if it's urgent, call us, but we're going to commit to making sure that these issues get resolved quickly. And we have a team here that is really kind of watching each other's back. Lenny, Summer, Mandy, all of us, we're really tracking to make sure that these issues get resolved. So we're going to commit to that. If it's things like working on rebuilding your PC because of a phishing attack, yeah, those are going to take a little bit longer than 60 minutes. But it's about technologies, keeping them simple and keeping your job easier. One of the things that we're going to really focus on as well is expanding teams to allow for faster and easier meetings with partners and borrowers. So, get with us. We're going to start rolling that out. We do have to assign some special licensing that would provide you with a phone number to schedule conference calls, but that's getting ready to roll out for whoever needs it. So That's all I have for this year. I mean, any questions? I know we're rolling along. We're running short on time, but we're here to help.
Well, I know that's not all you have for this year, Sal. That would be crazy. Just thought I'd bring that up. Thank you very much, Mr. Cerrito. And we're on to marketing. And Candace, thank you very much for all the work you did for today's meeting. Marketing, Miss Candace Ellington.
Well, thank you, Jack. I think I owe you a lobster dinner now. So, so we know how important marketing is. It's your ability to stay in front of your database, your target audience, and your agents and partners to get business. So that said, our department is number one. We're committed to being flexible. We're committed to helping you with any marketing efforts that you're going to try to take on in 2021, as long as they're compliant, to help you get the most exposure as possible. And during the marketing summit last fall, I covered a lot about what we are striving to do to support you, and a lot of that stands still. In fact, all of it does. And I won't repeat it all, so I'll just go over the highlights for what we're changing in 2021. This year, we're going to bring on additional Surefire support. That's going to free up Leanne a little bit to help tackle a few other promotional events and that sort of thing. And this will enable us to build out reporting, calculate actual ROI on certain campaigns, and maximize all of the touch points. We're also going to strategize more compliant co-marketing campaigns for you guys to get you guys in front of your agent partners more and bring in that purchase business. And if you want to run a campaign, any kind of lead generation system, come run it by us first. We can help you derive what ROI you can expect from that. So that's it from me.
Great. Fabulous.
Well, thank you, Candace, very much. We couldn't see it. I tried to send you a text, but
oh shoot, my camera says it's on.
You've got the good background too.
Oh,
but now
sorry.
I think we're off to Mr. Corey Swain for a recap.
Actually, hey, Mandy, is there anything on production side you want to join in there and chime in with before I get to the recap?
No, I figure everybody hears from me enough each week. So I did a polite pass and thought that it was more important that they hear from everybody else. If you have any production questions, you know where to find me. Text, email, phone call.
She is your fearless production advocate leader, jack of all trades, Miss Mandy Feely Swain. So thank you so much for everything you do every single day for this company. I don't say it enough publicly, but the things that you do, not only on the front line, but behind the lines, is always impressive and doesn't go without notice. So from all the leadership team, thank you for everything you do, honey. It's awesome. It's incredible, really. Guys, so I'm going to kind of jump in a little bit for Tracy. Here's a few things on Tracy's agenda. We're really to make some of the process a little smoother on the disclosure side. I think they've done a great job there. That look for more improvements there, more training there. Once again, that goes back to hiring more people at Fast Track to get those people trained to get in those departments. That's our training background. That's our PMR University, so to speak. There, it starts at Fast Track, and I know Disclosure will be using that team as well. We have a goal to be licensed in multiple states this year. We're working on several states right now. You'll see us. I won't tell you where they all are, and it's a surprise. We'll bring it later. But we're working on several states as we speak. We're also working on hiring a full-time licensing person to help you with your licensing and CE credits. We think that I'm trying to save Kim's life. Kim does a lot of that now, and about 100 other things that she does for me on a daily basis. And so we're going to try to get her out of that world a little bit and hire somebody full-time for that job. So some of the things we're working on. Once again, I'm just very grateful for everything that you've all done this past year. It's been an incredible year. I'm super proud of each of you. There are so many of you on that list. If I missed anyone, please forgive me. We're going to send that list out. Reading a list is never my forte. It's much easier for me to do it in person, but I hope I got everybody on the top producers list and the employees list. You know, you all did an amazing job. It was extremely difficult to pick the top employees this year. There were just so many people that worked hard, lifted hard, went above and beyond. And I think we're going to require that in 21 as well, by the way. So our goal for 21 globally is to be staffed a little bit better than we were in 20. I think 20 kind of snuck up on us a little bit. We weren't quite ready. I think we did an incredible job as a company, as a team. If you think back about March and April of 20, it was pretty messy, right? We didn't know where we were in the world. We had all kinds of issues with COVID. The market was on its head. We weren't really sure what was going to happen there. And all of a sudden we just got busy. So, you know, a lot of great people in this company jumped up and took control. Sal's team did an incredible job, by the way, of getting out PCs to almost everyone very quickly to make sure they could work at home. So a big shout out to you, Sal, and your team. That was really, if you look back in April of 20, that was a massive pickup for this company. If we hadn't done it quickly, who knows where we'd be today. So thank God we'd done that. Thank God they had enough stuff in inventory to make that happen. So it was really a big win for us. And, 21's a whole different year. We have a lot of goals in 21. And we really what we want to work on in 21 is just get really better at what we do. We want to be really, really good at it. So that's why we want to staff, we want to train, we want to communicate. That's really the theme of today. And so the leadership team is here to make sure that happens for each of you. And please remember, we have an open door policy. I'd much rather have you come talk to me or one of your team leads. If you're not happy, if you think there's something that we can do better on, please let us know. This is an open door policy, open door company. We want to make sure we're here from you every day if needed, and to make sure we be the best we can be. We are a self-critical organization, which means we meet every Monday to see how we can do things better. So please let us know. We're happy to always hear and listen to what you have to say. So once again, thanks for a great meeting. This is one of 5 series. So you'll have that. Please remember to log in and look at your schedule, look at your emails. Stay tuned for the next one, which Candace is on not next week, or the next week.
It is next week, February 24th. I think Jack's going to give the full rundown on everything.
Hey, I actually have it. Jack, you're up. You guys say all that stuff next. Here you go.
Thank you. All right. I want to thank you all personally for your attendance and participation in today's kickoff to Success 2021. I'm so looking forward to the remainder of our event schedule. And we just mentioned next Wednesday is Rhonda Conger, exciting, high energy. March 9th is Elliot Eisenberg, economics. March 23rd, Marcus Murphy. And April 6th, Mr. Kevin Wang, financial wellness. And reminder for loan officers, these events are open to the public. If you want to invite your agents, partners, potential recruits, advertising at pmrloans.com. Additionally, the last 3 events will be on Facebook Live. You can share the live stream directly to your social media feeds. In closing, PMR, contributors, and esteemed guests, thank you again for your time and efforts today. Hope to see you all again on the 24th. Remember, success breeds success. This ends our scheduled events for the day. Thank you for your attendance.